Here's something that might surprise you about the British economy right now. While everyone's talking doom and gloom, retail sales just delivered an unexpected punch above their weight. The Office for National Statistics dropped some interesting numbers on Friday that tell a fascinating story about consumer behaviour. British shoppers pushed retail sales up by 0.5% during August, compared to July. And here's where it gets interesting. That figure actually beat what most economic experts were predicting. The Reuters survey of economists had penciled in a more modest 0.3% increase, making this retail performance something of a pleasant surprise in an otherwise challenging economic landscape. But here's where the plot thickens. And this is the part most people are missing when they look at these headline numbers. While shoppers are still opening their wallets, they're doing so against a backdrop of serious financial pressure. Inflation continues to bite hard at 3.8% as of last month, with food costs climbing even faster than the overall rate. Think about that for a moment. Families are watching their grocery bills climb week after week, yet they're still managing to drive retail growth. That's either resilience or financial stress in disguise, depending on how you interpret the data. The real controversy emerges when you dig into what's happening beneath these numbers. Consumer confidence research from GSK revealed a concerning dip during September, and there's a storm cloud on the horizon that could change everything. Finance Minister Rachel Reeves has a budget announcement scheduled for November, and speculation about potential tax increases is already sending ripples through the retail sector. This is where major British retailers are starting to sound alarm bells. Primark's parent company, Associated British Foods, along with discount giant Aldi UK, have both expressed genuine concern that all this tax speculation could seriously dampen consumer spending habits. When discount retailers, the ones that typically thrive during tough economic times, start worrying about consumer behaviour, that's worth paying attention to. And this is the part that gets controversial. Fashion powerhouse Next threw another wrench into the optimistic narrative on Thursday. They're expecting their second half sales growth to decelerate, pointing fingers at a weakening employment market. Now, here's the million-pound question that nobody seems to be asking. If the job market is softening and people are anticipating tax hikes, what's really driving the current retail resilience? Some economists argue this could be consumers front-loading their purchases before anticipated price increases, essentially spending money they might not have in a few months. Others suggest it's simply the natural ebb and flow of seasonal spending patterns. But there's a third, more contentious interpretation. Could British consumers be using credit and savings to maintain spending levels that aren't actually sustainable? The timing of all this creates a perfect storm of uncertainty. With inflation eating into household budgets, employment prospects looking shakier, and potential tax increases looming, these August retail figures might represent the calm before a significant economic storm, rather than a sign of genuine economic health. What do you think is really happening here? Are British consumers showing admirable resilience in tough times? Or are they potentially setting themselves up for financial difficulties by maintaining unsustainable spending habits? Is this retail growth a genuine sign of economic strength, or could it be masking deeper problems that will surface in the coming months? The data tells one story, but the real-world implications might be telling something entirely different. And that's a debate worth having.